Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello and welcome to Reverse Mortgage Radio, the show where we cut through confusion and talk truth about reverse mortgages, what they are, how they work, and how they can change your life specifically for the better. I'm Bruce Simmons, your trusted guide in the world of reverse mortgages for over 2 decades. If you're 62 or older and living in Colorado, or specifically the Denver metro area, you're going to want to make sure you stay tuned in today because we're going to be talking about how the housing market and how it might just be a great time to consider a reverse mortgage now because changes are happening in the housing market. And this kind of reminds me of 2022, halfway through 2022, when the Federal Reserve started increasing interest rates. There were a lot of people that I talked to who were so used to the super low interest rates that were an anomaly. We'd never seen rates that low, I don't think. I don't know, since 1913 when the Federal Reserve came to be. I don't know if that was the case or not, but they were extremely low, and we got used to them very quickly. It was like a drug. And when rates just ticked up a little bit, 0.5% or whatever, and with reverse mortgages, the way interest rates work is the interest rate goes up, the amount of money you can qualify for on your home goes down as a percentage of the value of the home. So people were calling me and they weren't getting as much money as they thought they could with reverse mortgages. And so they said, well, let's just wait until the interest rates come back down. Of course, we know the story on that they never did. Now, right now, we're in a situation that's kind of similar. We've been used for years now to the appreciating housing market, the property value just going, not like 2021 or 2022, but still going up 5-10% a year for 23 and 24. Now we're in 25 and they're not going up. A lot of places are going down. Denver is starting to see some prices come down. Now, we're not going to see it 2008. Okay, I know that. But there are a lot of places in the Denver metro area and in Colorado where property values are not what people think they are anymore. You know, maybe people say, well, this place down the street last year sold for $800,000, so mine should be $820 or $50 or whatever. Well, no, yours might be closer to $750 now or $775. It's probably not going to be what that place that sold last year or even 6 or 8 months ago is going to be, because we're going to talk about a couple of reports today that came out from Realtor.com and also Redfin.com, which is kind of like it's Zillow. It's a real estate website. And I don't want to get too much in the weeds in these reports, but then we're going to bring it back around on how it impacts you if you have a reverse mortgage and possibly if you want to sell. Or if you want to get a reverse mortgage, what that's going to do to the appraisal value. Okay, so let's keep that in mind. But before we do that, I do always like to introduce myself. My name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage here in Denver. I've been specializing exclusively in reverse mortgages since 2003. And the company that I work for, American Liberty Mortgage, has also been in business in Denver since 2003. That's just a coincidence because I started with them in 2011. So now I've been with them for 14 years, just about. And I'm not going anywhere. If you want to work with somebody who's in the Denver area, who's been in the Denver area and going to stay in the Denver area for quite some time, please give me a call. You can reach me directly at 303-467-7821. 303-467-7821 is my direct line. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. Download my free consumer guide that I have there. And also you can get a quote. See how much money you might be able to qualify for. And you're not going to get called by 14 different lenders if you do that. I'll reach out to you and see if I can answer any questions, but that's it. And if you don't want to talk to me, you don't have to, okay? But you can gather some good data information, say, hey, okay, well, my house is worth, I think, $600,000. I owe $250,000. Can I get a reverse mortgage? And if so, how much money can I get after paying off the mortgage? Things like that. So it's a great resource for you. There's a lot of good content on the website. There's video testimonials at reversemortgageradio.net. Okay, let's talk about these two reports that came out. First, from Redfin.com. The headline, maybe you've seen it because I think it's going kind of mainstream, is that the U.S. housing market has nearly 500,000 more sellers than buyers. It's funny, they say the most on record, and then you read the report. It says, at no other point in records dating back to 2013. Okay, so the last 12 years for, they say on record. Well, I think our records go back longer than 2013. This is called clickbait a little bit, I think. But basically, it gets you interested because we know that there were a lot more sellers in 2008, obviously. But going back to 2013, this, it's important because we've been trained for the last decade, more than a decade, that property values are going up, and it's a seller's market. You can buy something now for $500,000 and sell it next year for $600,000 or whatever the case may be, right? But they do go in here. They say there's 34% more sellers in the market than buyers. Now, this is nationally, okay? But if you have a condo, and condos always take a brunt. I remember in 2008, they took a huge hit. But the condo market heavily favors buyers, where there's 83% more condo sellers than buyers. That's a big deal, okay? They say here, the balance of power in the U.S. housing market has shifted towards buyers, but a lot of sellers have yet to see or accept the writing on the wall, and I've seen that. Many are still holding out for hopes that their home is the exception and will fetch top dollar, and that probably is not the case. That's what Redfin senior economist Assad Khan said. He continues on. He says that, but as sellers see their homes sit on the market longer and notice fewer buyers coming through on tour, more of them will realize that the market has adjusted and they'll reset their expectations accordingly. Reluctantly, probably, I would say, more people are reluctant about this. And they talk about the different markets in this article. History shows that prices cool when sellers outnumber buyers. That's the law of supply and demand. We know all that. That's easily figured out, right? The other report that I want to touch on here, it's the Realtor.com April 2025 monthly housing market trends report. The thing that we focus here is, why are properties starting to sit on the market longer and go for a lower price? Because they're overpriced. They've been overpriced for a long time. And when you combine the price with the higher rates that we've been seeing, and they're not coming down, I don't think rates are they're going to be bouncing around between 6 and 8%, I think. Believe it or not, regular mortgages are what, in the 6.5%, 6.75%, even 7% right now. They may dip down lower, but if you're going to get a regular mortgage and you see the rates come down close to 6%, you probably want to jump if you can afford it, because I don't see rates coming back down in the 5s. If they do, they're not going to stay very long, okay, and they're going to bounce back up, because then I just think that that's the way the market is. I think we're going to see higher rates for longer. And a big part of that is because of the amount of debt that the government has and the inflation concerns over that debt. So there's a lot of macroeconomic factors here. But what we're going to do is we're going to get into a little bit about Denver. Okay, so this article about the housing market, they say the required income to afford the median priced home rose by almost $47,000 compared to 2019. So in other words, if you want to buy a home in today compared to 2019, 5-6 years ago, you need to be making $47,000 more money, excuse me, more dollars than you did back in 2019. Not a lot of people are making that much more. If you were making $100,000, that means you had a 50% raise since 19 to 25. That's kind of a challenge for most people. But they say home buyers found more options in April as the number of actively listed homes rose by 30.6% compared to the same time last year. For the first time, the number of homes for sale in April surpassed April of 2020 levels. That's a key pre-pandemic benchmark. Despite this progress, active inventory remains 16.3% lower than typical 2017 to 2019 levels. Now that's nationwide. Let me tell you about Denver, okay? Because they say where inventory is growing the fastest is in the West. 41% inventory increase for all major U.S. regions is what they're talking about, but 41% growth in the inventory in the West. Denver has seen a 90% increase over the 2017-2019 norms, which is kind of a, like I said, a pre-pandemic normal is what they're looking at. And so, in other words, if you compare 2017 to 2019, that range of values in Denver, or the amount of properties on the market, were 90% higher. So anyways, that's kind of, it's a little bit confusing, but we're seeing a lot more homes on the market, okay? So in other words, the strongest growth in newly listed homes over the past year is Denver. They say time on the market edges up in many areas. Now, again, we're going back to the national because I just kind of picked out some Denver stuff on here. But they say in April, the typical home spent 50 days on the market nationwide, which is 4 days longer than the same time last year. This marks the 13th straight month of homes taking longer to sell on a year-over-year basis. Still, homes are moving more quickly than they did pre-pandemic, or than the pandemic, before the pandemic, which isn't necessarily true for Denver because Denver has a lot more homes on the market than used to be. Just to give you some more specific numbers on Denver, the Denver metro area, which includes Denver, Lakewood, Aurora, Centennial area, they say the median home price now is $599,450. This is, again, Realtor.com, which is 4% lower than April of last year. And the 1.1% lower is a price per square foot, okay? Now, it's still 14.5% higher than it was April of 2019. And to afford the medium-priced home, you need to be making about $158,000 a year. So that's a 42% increase over 2019. And I'm not going to get into all the other stuff. There's just too many numbers. Basically, the market is cooling. Be aware of that. Now, why am I talking about all this stuff about the market when this is the reverse mortgage, right? You're not planning on selling probably. Now, if you are, because I do have a couple of customers that are selling their home, they're trying to sell their home. They've got homes under contract and they have to get their homes sold within a certain time period and they're struggling because of the market. But the thing to keep in mind is this can affect your appraised value. If you call me and say, yeah, my home's worth $600,000, it may or may not be. You have to reset our minds, okay, because appraisers are looking at homes that have sold recently and that are comparable. So many times people will call me and say, well, this home down the road it's sold for, $700,000 and it was completely gutted and remodeled. And yours, it hasn't been updated. Maybe you keep it in great condition, but it hasn't been updated in the last 15 years. That makes a difference. Okay, now you may not have shag carpet or purple walls or something, but it does make a difference if you're comparing your home to one that's been gutted and remodeled to a standard home that's been well maintained but not remodeled in the last 15 or 20 years. And that can affect people's perceptions because, so many people still think the market is going like crazy, but it's not necessarily. Now, if you just tuned in, you are listening to Reverse Mortgage Radio. My name is Bruce Simmons, and I'm the Reverse Mortgage Manager with American Liberty Mortgage here in Denver. Feel free to contact me with any questions about reverse mortgages at 303-467-7821. 303-467-7821 is my direct line. Okay. Now, what should you do? You're considering a reverse mortgage maybe, and you're thinking that your home's worth X number of dollars, and it may not be. Okay. Mainly the reason for this show is I want to reset people's mind on this because if you want to stay in your home, that's fantastic. The key thing is if property values continue to drop a little bit, and again, it's not going to go down by 10% or 20%. I really, really, really do not think that. Certain areas in Denver are probably going to continue to go up a little bit or hold steady. Other areas might drop a little, and especially if you have a condo, odds are that the property values are going to come down a little more than they would if you had a single family home. That's just the way condo market works. But the key thing is that you got to remember that you can refinance a reverse mortgage too. Let's say you think your home is worth $600, it comes in at $550, and we can still do the reverse mortgage, and we could just pay off your existing mortgage a little bit to so that you eliminate your mortgage payment, but you're not going to have any money left over, or very little bit money left over. Should you still do it? Yes, in my mind, I think you should. If you're going to stay in the home for the indefinite future, for as long as you can, most of my customers say, well, they're going to carry me out in a box, or I'm leaving this home feet first. That's it. Then, yeah, still do the reverse mortgage. Now, get out from under your mortgage payment. Back in 2022, when the rates started raising and I could still refinance people and pay off their existing mortgages, so many people told me, well, I'm going to wait till rates come down. And obviously they didn't. Then the rate kept going up, and I couldn't even loan them enough to pay off their existing mortgage. So they've been paying their mortgage payment for the last 3 years since 2022 when they could have got out of it. And when property values recover or if interest rates come down, you can refinance your reverse mortgage. There's no guarantee that you're going to be able to refinance because with reverse mortgages, most of them are on adjustable rates. If interest rates come down, your interest rate will come down. So you'll be charged less interest. And remember, interest rates with reverse mortgages don't impact you the same way they do with a conventional mortgage because you're not actually paying the interest. You're being charged it, but it's not coming out of your pocket. So as interest rates go up or down, it affects the amount of money you can get, but it doesn't affect your daily budget or monthly budget. That's a very important factor to remember. The key thing is, can you eliminate your mortgage payment, and will that help you? If it will, then it makes sense to do the reverse mortgage. And then if rates come down and values go up, like I think they would, if interest rates come down better, I think we're going to see a lot of people who've left the real estate market and just decided to rent because they couldn't afford a house. As interest rates come down, our values are starting to come down. And if interest rates follow, I think we're going to see a little bit of an uptick in the market. It's not going to happen this year, probably, maybe next year. Who knows? But eventually it's just balancing out. It's a good thing that the property values are coming down, believe it or not. I know maybe not for you because you're staying in your home, but generally speaking, for the health of the economy, it's a good thing that property values are coming down. And if you're not selling, it's, granted, it could hurt you if you're getting a reverse mortgage. But eventually, I think rates are going to start coming down too, and the Federal Reserve is going to feel a little more confident as it seems like we've got inflation under control. They're going to feel a little more confident about lowering the interest rate as well, which will affect everybody and help out people. And then we're going to see values settle into a certain, hopefully, historically average, rise of 2 to 4 to 5% a year, not this 10% a year or falling by 10%, things of that nature. So we're going to see more of a steady market that's makes sense for people, allows new homeowners to come into the market, allows people to upsell. So if you're in a house and you've got a growing family and you're in a 2-bedroom or 3-bedroom house and you need 4, or you just need more space, you're going to be able to do that because you're in an interest rate right now that may be 6.5% or 7%, and you're going to be able to refinance down to a 6%, or you're not going to be jumping your payment so much by upgrading your house. So for a lot of people with growing families, that's what you do. You move up, right? And you get a more expensive home. So hopefully it'll all settle out. But the key thing with the reverse mortgage is if it allows you to pay off your existing mortgage now, it makes sense to do it. If that's what your goal is, to increase the value or to increase your cash flow. If you own your home free and clear, it allows, and let's say you don't even need the money, because one of the things that I considered talking about, we'll probably talk about in the future, the top reverse mortgage specialist in the country, the guy that does the most reverse mortgage loans in the country, he does not need a reverse mortgage. He just got a reverse mortgage because he works a lot with financial advisors, and financial advisors are coming around to reverse mortgages that it's a good idea to get a reverse mortgage if you don't need it. Yeah, believe it or not, it is a good idea to get a reverse mortgage in place when you're younger, in your early to mid 60s, if you don't need it, especially, because then you've got this reserve money that's growing over time. And if interest rates go up, it's helping you because the value of that line of credit is increasing. The amount of money you can tap from that line of credit increases as interest rates go up. That's one of the huge benefits with reverse mortgages, assuming you can get money and leave it in a line of credit. Now, if all you're doing is you're paying off your existing mortgage and you're saving $800, $1,000, $1,200 in your principal and interest mortgage payment, because it's still your home, you still have to pay your own property taxes and homeowners insurance and maintain the home. Remember, reverse mortgages are just a loan against your house. The house stays in your name. Your heirs inherit the house when you pass away. They just have to pay off the reverse mortgage. But interest is continuing to accrue on the loan, and you have to continue to pay your own taxes and insurance. As long as you do that, you can stay in the home for as long as you live in the home. So that's a very important benefit. But if we do ever see rates come back down again, and I think we'll see spikes down and spikes up as far as interest rates go. So if you keep an eye on interest rates, you get a reverse mortgage now, and you keep an eye on interest rates and they come down, you notice them coming down, you can call me. Let's say you've had the loan for 3 years and you call me and say, hey, I noticed prices coming down or the interest rates coming down. Does it make sense to refinance? I can work up the numbers real easy. It doesn't take me long. Just to I'll do a quick search on the value of the home. Hopefully the value is holding, and then run the numbers. Usually, if you take a picture of your reverse mortgage statement and send it to me, then I can have everything I need, and I can let you know, yeah, it makes sense to take a deeper dive and do a refinance. We can increase your line of credit by $30,000 or $50,000. Or no, right now it doesn't make sense. That's the way it's been, that it just has not made sense for most people to refinance their reverse mortgage. But they're still getting all kinds of solicitations from other companies that don't understand the market, and they just want you to call so they could try to get you maybe a little bit of a benefit. It's called churning, and you don't want to do that. And technically, we're not supposed to do that in reverse mortgages. You don't want to do a reverse mortgage, again, unless there's a real benefit for you. That's why it's so important to deal with a reputable local person who, if I don't treat you right, you know where to find me, okay? I've been in the same company for 14 years. I'm not going anywhere. Conversely, too, when I treat you good, because I will, and you have questions, you can still call me, because I always tell my customers, no matter who's servicing your loan, no matter who sends you the reverse mortgage statement, I'm your guy. You're still my customer. I'm not letting you go. So if you have questions, you can still call me, and we can explain. I can explain to your family. I've done that before with people where a spouse passes away and an adult child gets involved, and they don't understand how the reverse mortgage works. And the surviving spouse is like, I don't really remember. Your dad took care of that or your mom took care of the finances. Let's call Bruce. Call me at 303-467-7821, and I'll answer your questions, even if I didn't do the reverse mortgage for you. Let's say you have a reverse mortgage right now, and you unfortunately got it from some guy in a cubicle in California or in Texas or in New York or someplace. That's fine. You can call me with questions too. I'll help you out. Okay. I've helped people who just find me online, heirs whose parents have passed away there, and they find, oh no, my mom had a reverse mortgage, and they Google reverse mortgages in Denver and they find me. I'll talk to you. I'll help you out. I'll walk you through the process, what it takes to, what your requirements are, what you have to do. To the best of my knowledge, I'll be able to help you, or to the best of my ability, I should say. So keep that in mind. But the key thing is with reverse mortgages is, does it make sense for you now? And just, we have to change our mindset a little on the market, the interest rate market, the value market too. That's what we're seeing now more and more, is that homes are staying on the market longer. They're not going for the full price that a lot of people think they are. And I think we're going to see a few months worth of people's mindset adjusting, just like it took in 2022 to adjust to the higher interest rates, which are really, the rates we're at now in the 6.5%, 7% range are traditionally normal interest rates. You go back to 2016, 15, 2004, 5, 6, the average interest rates are in that 6 to 7% range. That's a normal rate. And that's the way it's always been for most of the time I've been, the last 40 years I've been in the market, dealing with mortgages and finances. The interest rates for mortgages are in that range. Except when I first started, when they were in the 12 and 13% range. Of course, they shot up before I got in the market to 17 and 18%. And a lot of you remember that. But then they came down to the 10, 12 range, and that was a good thing. And then they dropped down into the 6s and 7s. So we just have to change the mindset, I guess, is the whole theme for this show. Making sure we understand the market conditions change. And we have been trained with these artificially low rates for the property values going crazy. But I don't see that happening again in the near future. We're going to have steady growth, I think, after this little bit of a decline maybe. Anyways, please feel free to call me with any questions you have about reverse mortgages. My name is Bruce Simmons. You can reach me directly at 303-467-7821. 303-467-7821 is my direct line. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. Go there, download my free consumer guide. You can also get a quote on if you qualify for a reverse mortgage now and approximately how much money you could get from a reverse mortgage. So I look forward to talking with you and hope you have a fantastic day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.